Ed, can you still hear us? You're muted.
Nothing.
Ed? Edmund? Edmund? Can you hear us?
Yes, Mo.
Okay, you were muted. Just be careful.
Yeah, I know. Because we are
Okay.
just having a chat over here.
So now we stay muted until 3:20, okay?
Okay.
All right, bye.
Bye.
Hi everyone. Thanks for joining. We're going to start in about 10 minutes.
Okay.
Okay. Yeah.
open the
Yeah, that's what I'm saying.
Okay. Streaming on me.
I'm on. Hello, everyone. A very good evening to you. Welcome to the Nonfarm Payroll live market session. My name is Edmund Tan, key analyst from 9 Academy Asia. Tonight's event is brought to us by FX Primus, the safest place to trade. In the next 20 minutes, we will be learning what is the non-farm payroll report all about and what are the implications that it will have on the financial markets. Joining me today is a very special guest, all the way from Cyprus, Europe. Let us welcome Kaia, Senior Market Analyst from FX Primus.
Hi, Ed. How are you?
Hello, Kaia. Hi, Kaia. I'm fine here. How are you doing there?
Doing great. Thanks for having me.
Most welcome. So later on tonight at 8:30 p.m., we will be having the non-farm payrolls data coming out from the US. So Kaia, can you tell us more about the non-farm payrolls report, its implications, and what are your expectations for the non-farm payroll data for tonight?
Sure, Ed. So just for background, this is the last NFP announcement that we have before the election in November. And it's going to be an interesting announcement because we've received a bit of mixed data from the US, I would say. So if you remember on Wednesday, we saw Adp Unemployment Change coming slightly better than expected with about 750 jobs added. This was versus the expectation of 650,000 jobs. And that delta or change was predominantly in manufacturing and hospitality sector. On the flip side, I would say that the very stubbornly stable initial jobless claims on a weekly basis are slightly concerning because we continue to see around 800,000 initial claims on a week-to-week basis. If you want to talk about a V-shaped recovery, you really want to see this number coming down gradually. And if we look at the historical NFP data, we can see that this data set has been pretty stable and even throughout the 2008 crisis, only to collapse in March this year. So as you can see, we lost about 21 million jobs in March. While we have recovered some of them, sorry, you're saying?
Yeah, that was the worst of the times of the job labor market.
Yeah, I would say it was absolute shock to the market, to be honest. And the companies started laying off people so rapidly that even the governments didn't have enough time to react. And, that's when you saw all the stimulus packages kicking in. We have recovered some of those jobs, but we are still very far from stabilizing. And if we look at the unemployment data, you can see that we are still near historical highs. We reached about 10% back in 2009, which was exceptionally high at this point. At that point, but in March we saw 15% unemployment rates.
Correct. So for tonight's data, I can see here that the markets are expecting the numbers to come in at about 900,000 jobs being created. This is based on Forex Factory. So as you mentioned, for the last couple of weeks, we've had a gradual improvement in terms of the non-farm data over the months. And of course, tonight, we're going to be expecting about 900K also. So I see that you have done a very nice research also on past data. Maybe we can share a little bit on that.
Sure. So I'm using trading economics as a data source for consensus information. So the market is pricing in about 850 jobs to be added. This is versus 1.4 million in August. Unemployment rate is expected to drop to 8.2% versus 8.4% in August. And I would say the hourly earnings and the labor force participation, it's pretty much flat. Now, if we factor in that ADP positive surprise, I would actually hope to see slightly higher non-farm payrolls as well, maybe around 900,000 to 1 million.
Correct. The ADP data, which was announced 2 days ago on a Wednesday at 8:15 p.m., is usually a preview or prelude to the actual non-farm payrolls data, which is coming out later at 8:30 p.m. However, once a while, it may be accurate. So we had a very positive ADP data on Wednesday, coming in at 749,000 jobs created, beating market expectation of 650K, like you mentioned. So if tonight's non-farm payroll data follows that trend, we could again see tonight's actual data being better than market forecasts.
Yeah, and just for the context, ADP stands for Automatic Data Processing. It's a US-based company that processes about 80% of payroll in the US. So they would have pretty accurate data, but it's always lagging.
Yeah, I'm actually pretty impressed with the recovery in the job market in the US. As you mentioned, as early as March this year, the unemployment rate was about 15%, and more than 22 million American citizens did not have a job. So the situation has improved drastically since the month of June until currently. And even the equity markets in the US has hit all-time highs on September the 1st, from the NASDAQ to the S&P 500. Of course, since then, there's been profit taking. So I'm very impressed with the speedy recovery of the US economy, to be frank, at the moment.
Yeah, Edmund, I agree with you. My only concern is that there has been a lot of stimulus from the government as well that has supported that, sort of put the floor to the jobs market. Like the stimulus may be wearing out gradually. We'll see how the Republicans and Democrats can come to a conclusion. But at some point, I would expect the unemployment rate maybe to deteriorate or just to sort of flatline around 8%. But it will take, unfortunately, years to come back to the full employment levels.
True. Yeah, the financial markets, or actually the US government, has pumped in more than $3 trillion since the month of March until now. And just this morning, they actually was trying to approve a 2.2 trillion package. However, the Republicans did not approve it. And again, it is up in the air at the moment, and they would need to get back to the negotiation tables possibly next week. Okay.
Yeah, I think on an aggregate basis, all the central banks across the globe have pumped like 13 trillion into the economy. I would say financial markets as well as to the subsidiaries to the companies and various unemployment claims. But I agree on your assessment about the sort of political aspect, especially in the US, because the election season is on, right? So we have about 3 weeks now, I suppose, 4 weeks until the election day.
1 full month, November the 3rd.
November the 3rd, correct? Yeah. So I would expect a lot of back and forth and, a lot of quarrels and not really thinking about the regular man on the street, but more on the, more ambitious political gains. Correct.
So we are almost at 8:30 p.m. But before we get to the technical charts, it's good to know that the economic situation has improved. However, I think today a lot of American citizens and also the financial markets, especially in the US, they got a big shock as US President Donald Trump was confirmed tested positive for COVID-19 along with the First Lady, Melania Trump. So this actually had a big impact on gold prices as of 1 p.m. Local Malaysia time. And we saw gold prices spiking up about $25 due to that news.
Yeah, I mean, I guess the reason for such price change is markets are pricing in uncertainty. What if Donald Trump will be bedridden? What if, something worse even happens? What's going to happen then? Are we going to have Mike Pence as a president? Or will there be even elections? Or I think it's just the uncertainty aspect that that's causing the gold price to change so much.
Yeah, that's what I love about the markets. There are so many exciting things happening all around the world and almost every single day, from COVID-19 to the presidential elections or even the presidential debate between Trump and also his adversary, Joe Biden. So let us have a quick look at the technical charts at the moment as we move towards 8:30 p.m. and towards the announcement of the non-farm payroll data. Okay. So we are currently looking at the US dollar index. This is on 4-hour charts. As we can see, the US dollar has been rising from support levels of 92.76. It's a very strong support because this support has been building since the 4th of September all the way until recently, the 21st of September. Okay. So on the 4-hour charts, there has been a strong rise. And then after it is pulling back for the last 4 market days, this will be on the 4-hour charts. When we scope down to a slightly shorter time frame, which is the 1-hour charts, we do see in even more detail how the US dollar managed to find very good support at 92.74 levels, and then after started to move up. Okay, we are having the announcement at the moment, my friends. It is 8:30 p.m. a quick look at the US dollar charts. Okay. So again, over the last couple of days, since Monday, Tuesday, Wednesday, and Thursday, the US dollar has been weakening and is currently trying to find support at 93.58 levels again. For today in particular, as we saw just now, the US dollar weakened at about 1 p.m. local Singapore and Malaysia time from 94.04 levels up to 93.75 levels. This is again mostly due to the news that US President Donald Trump was confirmed the COVID-19 virus. And not only did the US dollar weaken, we did see gold prices also spiking up at the same time at about 1 p.m. Again, it spiked up from 1,891 all the way to a high of 1,916 US dollars. So all of this happened within 2 hours, within a 2-hour time frame. Okay. Ever since then, it has gone quiet, and as we are getting the results now, let us have a quick look and see what is the data or the actual results of the non-farm payroll. Okay, wow, look at that. Non-farm payrolls numbers, non-farm payrolls numbers coming in at okay, number one, it is below market expectations, and number two, it is below by quite a margin of about 240,000 jobs less. Okay, so Kaia, what do you think of these results?
It's a big surprise. I was expecting actually a higher number at the back of ADP, positive surprise, but I guess we'll just have to see what are the details, where's the sort of shortfall coming from, but definitely gonna have a market impact. Okay, so I would expect all equity markets in the red today, most likely treasury yields going higher, gold most likely going higher, US dollar going higher.
Okay, very nice. So 661K below Kaia's and also my expectations. However, the unemployment rate came in slightly better, coming in at 7.9% rather than 8.2%. So that is some minor good news. And of course, the average hourly earnings came in quite disappointing, 0.1% versus a market expectation of 0.5%. Okay. So let us go back to the charts to see what is the impact on the US dollar index and also on gold prices. Okay. Looking back at the US dollar index, as the data is announced, we can see the US dollar marginally weakening. So, but if you notice the price action over here on the left, okay, price action over here on the left, it is not that aggressive move. Okay, it's not an aggressive move. I would say that possibly markets over the last 2 days were more concerned over the financial stimulus package, which was rejected early this morning. And of course, with the news of Donald Trump contracting the virus, this will throw a spanner into the works in terms of the US political scene, as Donald Trump is scheduled to have a presidential election on the 3rd of November. So a lot of things will be up in the air, especially with Donald Trump down with the virus, whether he can start to campaign for his election role, or whether he would just be quarantined until the day of elections. Okay, so a lot of things are now up in the air, and a lot of investors or even analysts do not know what will happen for the presidential elections. Okay, so dollar index again pretty docile, pretty mild. Gold prices are still hanging around this range of 1909. It's been trading at this range ever since this afternoon. Okay. So Kaia, do you think that the non-farm payrolls data is still a very relevant report for us to analyze every single month in terms of trading opportunities?
Great question, Ed. And I would say yes and no. I would say yes, because this report still gets a lot of attention from market analysts and participants and traders and also from the central banks, I would say. But I would say no, because, you know, we had this discussion that the Federal Reserve Bank has said pretty explicitly that going forward, unemployment data will not be the key driver for the interest rate policy. So I would say that probably the importance of NFP will gradually decrease, but nevertheless, it will still be quoted by pretty much everyone. So I'm sure we're going to have these discussions on a monthly basis going forward.
Yeah, because I kind of noticed that over the last 1 to 2 years, the impact that the non-farm payroll has when it is announced on the market, the impact that it has or used to have currencies or even gold prices has kind of diminished. Okay, so like what you say is true. Possibly governments are looking more on fiscal policy, monetary policy, or even interest rates, or even at this moment, all the financial stimulus which is being pumped to the market, rather than focusing on the unemployment data or the jobs data.
What seems to me, Ed, is that market participants are looking more at the language that the Federal Reserve bankers use, or I should say central bankers use. They don't even care that much about the actual data. They more care how the central bankers synthesize that information, what they're going to do with that information. So if Jay Powell says one thing, that's what everybody's going to hang on to, versus, okay, here's the jobless numbers. And even if it's worse than expected, I think the participants already expect central bankers to pump more money in. So in a way, bad news becomes good news.
True. I've noticed that a lot of negative data or results, instead of pushing down the US dollar as it theoretically should, instead of going down, a lot of times the US dollar does go up instead. As you mentioned also, I believe that most central bankers, especially with the US taking the lead, they're going to be keeping interest rates low, historical lows. I don't think they're going to negative territory for the US, but the UK may consider it. And of course, a lot depends on how the COVID-19 situation is either being contained, controlled, or hopefully there's a full vaccine being developed, approved, manufactured, and distributed all around the world. That will start to see a very steady recovery in the global economy.
I agree with you. And, new Japanese Prime Minister, Mr. Saga, has also mentioned that Japan may introduce negative interest rates, which is interesting because technically they already have negative real rates. If you consider the nominal and, their whatever inflation, actually they have deflation, then technically most regions or most leading economies already have negative real interest rates. But yeah, we'll have to continue to monitor and see what's the announcement coming. But again, for the next 1 month, it's all about US elections. That's the main driver for everything, and we can just forget about other data points.
Correct. I pay a lot of attention to any events, political or economic wise, that will affect the strength or weakness of the US dollar, because it helps me to gauge how the other major currencies are going to move against the US dollar. So yeah, I'll be keeping a close eye on anything US related, from the elections to Donald Trump's COVID and so on. So are we taking any questions, Kamaru? Oh, okay. Okay, so yeah, sorry, just sidetracking. Okay, so we are starting to see the US dollars, gold prices starting to push down. So as of this morning, seems like 1913 is a resistance, and a couple of days ago on YouTube and also on the daily market analysis, we were looking at 1918 as a resistance, which it almost touched yesterday at 1916.64, and currently it looks like it could be pushing down. If you look at the gold price chart, this is a 1 hour chart. Okay, this is a 1 hour chart. It has been rising steadily on this uptrend line. Okay, and this morning also is testing this resistance. So on the 4 hour charts or even on the daily charts, we could see if it has difficulty getting past 1913, it could move further down to find support levels again at 1850. However, if there's a strong push upwards, we could see it test 1918 as the first level, and the next level that we are looking at is actually about 1954 levels. Okay. So once the price comes back to 1954, it will theoretically complete the cycle of a cut, and then after it should go sideways to form the handle. Okay, so yeah, so again, not much of a major impact on the US dollar or even on the UK pound, and also quite minimal impact coming for the gold prices. Okay. So Kaia, would you like to add any words of advice, other words of advice for traders who are trading on the US dollar or even on gold prices before we end?
My compliance team doesn't allow me to give any advice. What I would say that just exercise, I would say, caution for the next month for sure.
Understand. So I guess over the next 2 to 4 weeks, pay attention to definitely the US presidential elections, or even the immediate priority is actually to see how Donald Trump is, whether his condition is well severe or not, or whether he is fit for re-election. Okay, so I think keep an eye on the elections, and again, being in the financial markets, there are plenty of news happening almost every single day, sometimes even on the weekend. So make sure you guys stay tuned to our daily market outlooks by Kaia and also by myself. And of course, we do post our Facebook daily outlooks. We do post our outlooks on Facebook and also on YouTube. And please make sure that you guys follow us on FX Primus Facebook pages. And also we have YouTube channels. Okay, so I would like to let us all thank Kaia today for being with us. Okay, oh, 1 second. Where can I find the data of? Okay, there's a question here by a participant. Let's just have a reference to it. So the question is basically, where can I find the data? Okay. So for those who are new to Forex trading, a lot of traders like to go to Forex Factory. Some may go to Google Finance. Kaia, what is your favorite economic calendar to refer to?
I use actually Trading Economics quite a bit because they have nice charts. They give a bit of explanation about each of the data points, and they just cover pretty much everything. So Trading Economics is my preference, but both of the sources you've mentioned are very reliable as well as FX Street.
FX Street, correct. I do see FX Street. Another one is investing.com. So yeah, so Kaia looks at Trading Economics, and also what's the other one again?
FX Street.
FX Street, correct. Okay, so yeah, most of these economic calendar websites are pretty accurate, and they are very useful, and you may even find full reports being published on their websites. Okay. So any more questions before we thank Kaia again for being with us? Okay. Data is negative and accordingly gold should go up, but it's going down. Okay, very good question from a participant. So basically, what he means is that the non-farm payrolls data is negative, and this is what I normally share with a lot of traders. Don't blindly trade the markets based on results, because sometimes that is the fastest way not to make money. Okay, yeah. 661K is negative data, and theoretically the US dollar should weaken and gold prices should spike up. Okay, the way I look at it is this: gold prices has already spiked up just now. Okay, by about $20 at about 1 p.m. local Malaysia and Singapore time. So a lot of the news or factor has already been priced in. Maybe later tonight or maybe even on Monday, gold prices could go up, but that could be another story. Okay, but at point of time of data release, try not to wait until the data is released, for example at 8:30 p.m. just now, and then you will go and take a buy trade or something on the markets. So usually try to analyze and enter the markets before certain news is announced. Okay? There's a lot of psychology behind it, but we leave that to another day. Thank you very much for your time, Kaia.
Thank you so much for having me.
Okay, thank you, Kaia. Thank you, everyone from FX Primus, Europe. And I would like to thank our team in Asia also. And on behalf of 9 Academy, I thank again FX Primus for having us to be part of your exciting webinars and live streams. So thank you, everyone. Remember to follow us on Facebook and YouTube. That is where you will get the latest information and updates regarding our events and also regarding our marketing promotions. Thank you very much. Have a good evening. Have a good weekend. And I'll see you again next week. Thank you. And
Bye.
Good weekend. Thank you.